The big inflationary bounce. So what's going on with inflation? And more importantly for you, what's next? We're going to talk about all the drivers of inflation, forces pushing it higher, and all the forces pulling inflation lower. Because then you'll know how to set up for everything that's about to show up next. You're looking upstream. And you need to know everything that we're talking about today in this video. If you've got any kind of credit card debt, liabilities, a mortgage, an auto loan, this all affects you. It's already affecting you directly. Did you know that interest rates have recently spiked pretty dramatically? Well, they don't feel like it's a spike in the short-term time frame, but if you look at the chart over a 25-year chart from the Fed funds rate, you can see how in the last couple of years, the Fed funds rate has really increased dramatically in price in a very short window of time. I always tell you that it's more about the speed of the change rather than the destination. And this is all at a time when consumer debt, and you probably feel this yourself, I know I do, I know everybody I know feels it, has hit a record of $17.05 billion. Here's a chart of it from the Federal Reserve Bank of New York. And this is all right while we're at the precipice of a looming recession, which, as I told you in a recent video, is going to change all the rules. Politicians will go reverse of what they told you before. They've got the cover now of the recession. They say, well, I told you that before we were in the recession. Now we're in a recession. We have to change what we said we're going to do. This is a chart from the National Bureau of Economic Research. You'll see that unemployment climbs through and after a recession. The dark shaded areas are a recession, and you can see every recession on here starts off, and then unemployment starts to climb, and then it ends, and unemployment continues to climb. And this right here was the longest economic expansion in American history. But there's a lot of confusion about all the different types of inflation and all the different ways that they look at inflation. But the one that really matters to you is when you go to the grocery store and you pick up something off the shelf and that price shocks you. That's the type of inflation that I think that we should be talking about. Technically, inflation is more money, printing more money, having an expansion of the money supply, inflating the money supply. But none of that matters. What matters is when you pick up a snack pack, if it costs $2 more than it did a year ago. So we'll get into all of this a little bit. We're going to talk about the real painful type of inflation that you're facing or dealing with right now. These are inflation drivers, forces that are pushing inflation higher. And this list includes all of these, but it's not limited to that. For example, a weakening US dollar can really cause inflation. The weakening dollar is, in fact, the manifestation of the inflation, which was the problem. The weakening dollar is not causing inflation. The inflation is causing the dollar to be weaker. This is from Trading Economics, US dollar 50-year chart. And I pulled this out from an article when I was doing my analysis. And it's 7 ways to invest in a falling dollar. And what they say is U.S. companies generating international sales. This is from U.S. News. Commodities, gold, cryptocurrencies, emerging markets, international stocks, international currency ETFs. And another thing that can drive inflation higher are government policies. For example, wage or price controls, which there's rumblings about now, there's rumors about. We're talking about getting closer and closer to price controls. And just like the trade war, I told you would backfire and would have no positive effect at all. I called it from day one. Price controls will have no beneficial effect. They'll only stoke inflation and make politicians feel like they're doing something good and make people think that things are under control and inflation is being dealt with. But all in all, it's just going to backfire. It's a mistake. Price controls never, ever, 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 ever work. It's a slap in the face of capitalism, and it's artificial, which means it's going to be temporary. The effects of it will be temporary. Another thing that drives inflation is monetary creation. You remember all the quantitative easings they've done so far? 1, 2, 3, not QE, QE infinity. And I'm telling you it's going to be QE next and QE last, and then we can all move to Canada. This is monetary creation, all the quantitative easing results. This is from Statista. And some of the key insights that they brought out of this article. The balance sheet as of March 11th, 2020 was $4.3 trillion. The Fed's balance sheet as of February 2023, so we're talking 3 years later, was $8.4 trillion. So in other words, it basically doubled from 2020 to approximately exactly 3 years later. Doubling every 3 years. Another thing that can drive inflation higher is when there's investor expectations or consumer expectations that inflation is picking up, it's going stronger and stronger, higher and higher. That makes people buy more stuff and rush out and buy things. So it causes inflation. It's a spiral. You see from this chart, there's inflation when it picks up steam. This is from Advisor Channel. It's historical U.S. inflation, a 100-year chart. Another thing that can cause inflation is when there's limited product availability. And one of the things that is really dragging out here with inflation that's not going away yet, one of the more stubborn things that's sort of lagging around is food price inflation. The pandemic disrupted nearly every part of the food supply chain, including production, processing, and retail. Those effects on the food supply chain are still being felt today. And between Russia and Ukraine, there's a third of the world's wheat supply right there. Here's the last few comments on inflation from a publication known as Insider. Increased costs, including wages, government policies, and devaluation of the dollar, all play a role in inflation. But let's get into some happier news. Anti-inflationary forces. I've been telling you guys for ages that inflation was going to come down, and you're not feeling it just yet on the store shelves, I know. But that will be the last thing to come down. Second last, I think last will be house prices. With some anti-inflationary forces, including but not limited to a strengthening U.S. dollar. Just as if the U.S. dollar declines in strength, that's inflationary. If the U.S. dollar gets stronger, that's anti-inflationary. Government policies are also anti-inflationary, wage and price controls, and I know I said that they were inflationary as well. At first, they're anti-inflationary. At first, they make people feel better. At first, you feel like inflation's under control. In the longer term, they always backfire and cost everyone a lot more money. Just like a trade war, just like the sanctions on Russian oil have actually resulted in more Russian oil being sold to other countries. Another anti-inflationary force is when a bubble bursts. Think of any major bubble. Best one that I like to talk about is the dot-com bubble. Here's a chart of the Nasdaq when the dot-com bubble burst. And a quote here, by 1999, the price-to-earnings ratio of the Nasdaq Composite Index had astonishingly surpassed 90. A price-to-earnings ratio of 90. And this is the Nasdaq Composite Index. It means basically that it would take all the money the company makes, profits, net profits, every year, and it would take 90 years to add up to the value or the cost to purchase one single share. If you do not know that it was extreme irrational exuberance territory, then that is 100% on you. You eventually would have lost whatever money you lost anyway. Another thing that's going to pull inflation lower is if the economy declines, as it will as we roll into recession. And this is from Economics Help. Why inflation tends to fall in a recession. Firms have unsold goods, therefore, to improve their cash flow, they try discounting goods to get rid of their excess stock. I told you guys about supply gluts. I told you this ages ago, months and months ago. And now you're seeing them. I told you the price of used cars is going to come down. All these prices are coming down lower at a time when everybody and their grandma is telling you that inflation is going higher. Lower wage growth also brings inflation down. As unemployment rises and there's more competition for job vacancies, it's harder for workers to bargain for higher wages. Another force bringing inflation lower are lower commodity prices. A global recession should usually reduce demand for commodities and therefore reduce the price of commodities, leading to lower cost push inflation. All of this is all playing out exactly in a perfect moment of time. Let all the weak hands get shaken out. Leaves more for us. We get stuff at lower prices. The fact that we even bought gold at the prices it's at right now is a joke. You've already made one of the best investments in your life. You don't even realize you did it yet. And I talked earlier about inflation expectations. If you expect inflation to go higher, you're more likely to react and buy things, thus in a vicious cycle driving inflation even higher. So, one of the anti-inflationary forces is when expectations are for inflation to go lower. And more people are talking about, and more people are now seeing what I've been saying for a long time. Inflation's coming down. It's going to continue to come down. And then it'll get to the point of the inflationary bounce. And I'm going to get into the whole premise in just a minute. But falling asset prices would also make people feel less wealthy. The wealth effect will fall as real estate falls. In a recession, the price of houses and other assets tends to fall due to lower demand. This leads to lower wealth and therefore less spending. And another thing that's anti-inflationary is a reduction in economic activity, a reduction in spending. Here's a chart of the velocity of money, and you can see it's an indicator of the health of the economy, the activity of the economy. Another major anti-inflationary force has been automation. When you've got a robotic arm assembling things rather than 10 workers, it saves the company money. They can sell things for less of a price tag, but those people don't have a job anymore. Automation is predicted to displace 20 million manufacturing jobs by 2030. That's not that far in the future, you know. So that's the setup. I hope you're in a good mood here. All of that leading up to this point where I'm going to tell you that now, we're starting to have the usage of artificial intelligence. This is going to be the biggest deflationary force we've seen since automation. So the big inflationary bounce. There's a lot of US dollars held by other countries, but you know that recently in history, the petrodollar has shown a lot of cracks. And if you're not required to buy oil in US dollars anymore, you don't need to keep as many US dollars in your coffers. At the same time, foreign nations like China and Japan specifically have been buying all our foreign debt. But they're not doing that as much anymore, and there's even rumors now talking about China weaponizing the US debt that they hold, because they could release that and that will have effects on our economic system here. But if we can't bring in enough money from tax revenues, and we can't borrow from other countries, how else do we pay for all our bills? We raise the debt ceiling, and we basically just authorize that we can print more and more money. And the entire world is seeing now that we're just taking this irresponsibly. We're just printing money like crazy without backing it up with anything other than our reputation to pay back our debts. So when we have a budgetary shortfall, we create new money to cover that over. And I just want to say something about inflation. I believe it's going to continue to fall going forward as it goes towards 4% and likely below that level well before we hit any kind of inflationary bounce. Then all that's playing out. US dollars are coming back to our shores at the same time. Then we enter recession. That's when you're going to see a smorgasbord of layoffs and defaults. Here's a chart of severe delinquency year to date from Y charts. And it looks scary. That's why I pulled out this chart. But if you look at a longer term chart, this is very low. It's incredibly low. But this is severe delinquencies. This is how it starts. Severe delinquencies are 90 days overdue. And I also want to prove some of the things I've been talking about by showing you a chart of the US dollar, how much it's being used worldwide. And here's a chart of DXY, the US dollar index, which has been holding up pretty well, but its days are numbered before it starts to decline in comparison to other global currencies. So then you've got rising unemployment, you've got increasing default rates, increasing delinquency rates, and increasing bankruptcies, as we've been seeing very often for the last number of quarters. That will heat up. It'll get more extreme. Overall, social morale will be very low. And that's when politicians take notice of it. And they're going to do this by overreacting the way that they always do. They'll say QE 1, 2, and 3 didn't work. QE infinity didn't work. QE not QE didn't work. So let's just do the same thing again. That's why we get QE next, which will line up with when a lot of these US dollars are coming back to our shores. It's not like a big chunk of dollars comes back, boom, in one motion. It's like leaking. There's countries with billions of dollars, millions of dollars that it's leaking out. They're using less of it. They're holding less over time. That's why you see the global usage of US dollar declining across the entire earth. This is from CNBC, a global usage of the US dollar chart. So for the social hardship, we get a QE response, which will be the first QE bomb that I call QE next. And that's going to run us up to high single-digit inflation really quickly. But at the same time, we'll have more rising unemployment. Defaults, delinquencies, bankruptcies will pick up steam even to a greater degree. And you'll see a further slowing of the velocity of money, at which point social morale is even lower. So the government comes over the top with a QE bomb. I call that one QE last because it's going to be so much bigger than we can handle. The economy itself and the entire world will recognize we're just playing monopoly money here. What is this all going to look like? You're going to see a V-shaped bottom in the inflation rate, which will be the inflationary bounce. First QE will drive it up in the mid-high digits. The next QE last, will throw it up into the point where we might even get towards hyperinflation. We're all going to watch inflation run away on us. We'll see it happening in front of our very eyes. But in terms of timing, trying to call the timing for all this, there are too many moving parts. We talked about most of them in this video. I'm not calling a timing on this at all. It'll be a response to the quantitative easing, the money bombs that they're dropping on us. What else are they going to do? Please tell me. The good news is that there's a lot of specific ways to prepare for all of this. And I detailed them all in a video that I did recently about the ways to prepare for the coming recession. There's a link below this video and one at the end of the video. Definitely watch that if you want to know actual action steps to take to weather the storm, preserve your wealth, help the people you care about, and get through this on this side in a better place than you are right now. More millionaires are made in the Great Depression than any other time in human history. Not counting probably some things that have happened in China. Who knows? Those numbers are out of control. And if you want to get more, please support our work. You can become one of the driving forces of everything we do by joining simply the Peter Leeds Army. We're a really small team here. I set mousetraps, I plunge toilets. Any help you can give goes a very long way. We love you guys. We're working really hard for you.